everyone to this, what we hope will be a really interesting session on partnerships in energy lending. And what we're going to talk about today is making the business case. For the Filipinos who are here, excuse my pronunciation, but mabuhay, is that the correct? Yes? My name is Nikki Armacost. I'm the Managing Director of ARC Finance, and ARC is an organization that's focused on financing mechanisms for clean energy and water in the developing world. And we have here a really interesting and prominent group of leaders in this sector, each of whom has an interesting financing model, either that they have established and worked on for some time, or prospective energy lending programs where we're very interested to see, because of the organization, what they will do in the future. And so as ARC has explored this field, one of the things that we've noticed is that many MFIs are intrigued by this opportunity, but they're a little bit afraid of getting involved in energy lending in case, either because of bad experiences that they've had in the past, or because they don't know how to assess the risk. And so what we're going to do in this panel is talk about some of the challenges, some of the opportunities, and some of the interesting and innovative financing mechanisms that are out there that will make energy lending something that hopefully when we look back in 10 years, we'll find that many, many more MFIs are involved in doing. So I'd like to introduce this fabulous panel to you. We're going to start today with Mayukh Choudhury, who is with Milaap, which is an investor that invests in microfinance organizations, but it sources its money in a very interesting, different way. It uses crowdfunding to source finance for clean energy. So, Mayukh, can you tell us a little bit about the rationale for starting Milaap and explain? Some people may not know what crowdfunding is. Explain what that model is and why you decided to use that model as opposed to a different, more traditional kind of investment model.
Thank you, Nikki, and thanks a lot for this opportunity as well. So just to explain how exactly Milaap came in the picture, or what was the thought process behind Milaap. So it is kind of 4 years back. I had quit my job as a consultant, and I was working with a solar lantern startup, and that was Delight. And at that point of time, the entire thought process was, I wanted to figure out what are the kind of things that I want to do in life, which I relate to, which I would like to make a tangible impact on, and met one of my co-founders as well. So there were a couple of simultaneous thought processes going around at that point. One was that there are individuals like us, guys who have just graduated and were working, and also working professionals, everyone who wants to support a cause. For some of us, the cause is energy. For some of us, it's helping people get access to education. For some of us, it's helping communities get access to water and sanitation. Every one of us wants to champion a cause and wants to do a tangible impact on that. On the other side, what we are seeing at a point of time, I was in charge of looking into models of energy financing and microfinancing for solar lanterns. What we are seeing is that there is a huge demand on the ground for financing for the segments which are not traditionally in the microfinance area, but which are having an end usage specified, something like solar lanterns or water and sanitation, again education. So what we figured out that there was an interesting mix happening. Hey, we have a set of people spread out all over the world who want to support a cause, and we have a set of really good demand that can be there on the ground. Now, what was stopping people from doing any tangible impact, because there was no avenues to do it, and what was stopping the models on different kinds of financing emerging is because there was no capital to do it. So even when we are talking not only of a small size MFI, but a big MFI which is trying to build an innovative program, it's not always the easiest of things, because commercial investments will not want you to experiment with very risky projects. So that's where the entire idea of crowdfunding came across. because we were seeing certain developments in the crowdfunding space, and we said, hey, a crowdfunding atmosphere can actually empower individuals. Somebody sitting in the USA trying to do some kind of a tangible impact with a cause he believes in his home state or in his village in India, crowdfunding is the best way, because he can see in that household the exact same conditions in which he studied when he was, maybe under a kerosene lantern or something. And on the other side, using this capital of crowdfunding through microfinance, what we could do is actually incubate models which do not get capital investments today. Because our idea was that, if you talk of energy lending, if you talk of lending for the education sector, or for water and sanitation, India as a country, if you look at the macro numbers, each one of these can be a huge business opportunity. But today, they do not attract capital that much because the lending models yet need to be figured out. So somebody needs to incubate those models. We cannot expect them to attract capital straight away. So we figured out that the money from crowdfunding is essentially patient capital. If we can put it on soft lending programs, we can make maximum utilization of the capital. And that's how we can do a dual objective. On one hand, empower individuals to support a cause, and on the other side, build systems that can sustainably address a lot of social issues.
Thank you. One of the things that struck me when I first found out about Milaap, because you started relatively recently, but it was a very interesting time in terms of what was going on in microfinance in India, where as a result of the Andhra Pradesh crisis, money dried up. And so the funding that you provided filled a gap that had developed because of that crisis. So can you talk a little bit about that and how actually, I've heard you actually saved a couple of microfinance organizations because of the funding you provide. I don't know whether that's melodramatic, but tell people a little bit about that.
Saved would be, that did help us, one of our partners. So when we started in 2009, that was the peak of the microfinance, in India. But at that point of time, we made a very specific choice that we are not supporting microfinance companies here. We are supporting a cause. And microfinance is a medium to address that cause. So we were very, very specific. We had lots of debates on whether we should be working with small-time MFIs for traditional microfinance. We made a very specific choice that we will only work where there is an end cause which is there, because that's what we wanted to build the company on. Now, and of course, there was this entire thought process that a market that is expanding so fast will go in for a correction. That definitely was there in mind as well. So, as I said, the Andhra Pradesh crisis, whether without it happening or not happening, we would have done what we are doing today. Now, one of the interesting examples which Nikki is referring to is one of our partners with whom today we have a pretty decent energy lending portfolio, is a small MFI a very small MFI actually in eastern India. And back in 2011, when I had done the first due diligence, I still remember myself saying that, this organization doesn't seem to have surviving because their entire line of credit was choked. Not that the organization had a problem, but the banks had stopped lending to the sector completely at that point of time. For no reasons, no fault of theirs, the banks had stopped lending. There was no credit available. So at that point of time, we started with them with just a $2,000 loan. Imagine to an organization. And today, that organization has picked up. That solar program was what kept them running for around 6 months to 8 months, after which the credit market eased out. So yes, what you're seeing is that in terms of supporting the cause, what also emerged is that this microfinance organization, which otherwise would have found it very difficult to keep the basic engine running, could actually tide over the crisis because of energy lending and because of the line of credit we were able to provide to them.
And while you're talking about DCBS, which is the organization you're referring to, tell us how you select your partners, the kind of due diligence that you perform, and any kind of capacity building support that you perform or that you source for them.
Sure. So in terms of due diligence, there is of course a first hygiene check that goes out in terms of who is the management, what are the basic financials. But that's not a very rigorous one from our end. The most rigorous point that we try to address is the intent of the partner. Because what we believe is that any lending, whether it's energy, education or anything, is a strategic choice that an organization has to make. An organization trying to just do it offhand like any other product it's very difficult to scale up. It's not the same kind of financial product as a microfinance company. So we spend quite a bit of time trying to understand the intent of the organization, because every new lending model will run into some trouble. And at that point of time, we don't want a partner to desert it by saying that, hey, this thing doesn't work. We want them to work out solutions. So that's exactly where, for us, a very, very strong focus is on the intent and the strategy. An important piece is, of course, the basic financial due diligence, which any other financial organization will do. In terms of capacity building, we try to do as much as we can. I mean, to an extent, in terms of explaining them what the process is and all. We have a data management system which we have built on force.com, which we give to our MFI partners for organizing data. But that is exactly where somebody like an Arc Finance comes extremely helpful, because we are a platform who is doing fundraising. We want to stay focused towards that. Working with the MFI day in and day out to improve their processes, to build systems, to build them to scale, that guidance, it's difficult to provide under the same umbrella. And that's when the partnership of Arc, apart from the line of credit, is more valuable for us. It's because it is actually nurturing the partners. So, and that's the way we are progressing in every sector.
You mentioned the line of credit. Can you talk a little bit about the income smoothing for you? So one of the things that happens with crowdfunding is that it's sort of lumpy money that comes in. It comes in as people feel they want to donate, or to invest, but it's not necessarily predictable. So how do you ensure that the funding that you get to your partners ends up being experienced by them as a smooth process?
So we completely believe in focus or in core competence. So while as a fundraising platform, we do not go and take the individual borrower risk and work with MFIs to take that up. We do not also expect the MFIs to face uncertainties because of variability in the crowdfunding flows. That's my work. That's what is my bread and butter work, to manage fund flows. I mean, if I go and tell an MFI partner that, hey, I may give you this much, but I may give you 20% less, it's very difficult for them to do the predictions. So what we do is we make fixed commitments to our MFI partners. Whatever we can raise from the crowd is great. For the rest, we always manage a pool of buffer funds, which we'll utilize to manage to keep a fixed line of credit to the MFIs. And that's where the second piece, where Arc has been extremely helpful in terms of giving the line of credit to us and actually helping us in making good commitments to the MFIs so that we have a long-term partnership.
Fantastic, thank you. Let's turn to Mr. Ghosh, who is the Managing Director of Bandhan. He doesn't need an introduction from me. I'm sure you all know him. One of the things that that's sort of well known is that Bandhan is actually certainly the largest MFI in India, and someone was saying to me today, the largest MFI in the world. And exciting for us, something that's very exciting is that Bandhan has recently been assessing whether it wants to get involved in energy lending. And so, Mr. Ghosh, can you tell us the process that you went through in coming to the conclusion that this would be something that you would like to experiment and pilot with Bandhan?
Thank you, Nikki. This is a good pleasure to share in here. We know that in the Indian economy, 65% people have not any bank account. They are not accessing the credit. In that moment, I started the microfinance services to the people who are not bankable. And for that region, we are now is in nearly 5 million customer based in their to credit program. And 2001, when I started it, the credit program for business credit, the 3,000 rupees, Indian rupees on that, maybe the $50 US. So day by day, when the income is increasing and different business is growing, expanding, and scaling in the borrower's level, their loan size is increasing. And also day by day, we are thinking on that there are different needs have been developed on that. So after the 3-4 years, we see that they have a need in the one of the loan or any financial support, they are again go to the money lenders because of the any treatment is needed to their family. So then we started it one health loan, which is a 10,000 Indian rupees, maybe the now nearly the $200 on that. And then the health loan, because of that, immediately they have need the money. There is no way they are getting the money, and they are utilizing it in a good way. Now that loan have been also used as a sanitary napkin of that. So what we saw that their demand is diversifying from the business to others. When business income is coming, and their different demand is increasing on that. And that sanitary napkin, you maybe know that the 125,000 people installed the sanitary napkin within this year of that 2 years. And after that, again we see that the poor people, so when income is increasing, and we see that the women are their surplus money utilizing better of the children. And better of the children means education of the children. And children education, they are sending their children from government school to the private school, English school. There is a migration part has come very big way. So in that moment we are thinking, why not we can support them to purchase the books and the tuition fee. And we again started this the last 2 years before is an education loan for the children. This is the 10,000 rupees maximum they can be taken in the during the period when the admission taken of that. This is the one part is there. Now day by day their demand is differently coming on that. If you see that the 55.3% people of the country are using the electricity in our India, and out of that the 50% people are urban and the metro city in there. And maximum people in the rural, they are not using the electricity. And not only that, that electricity is not at the full time. The several times is frequently coming in the load shedding on that, or voltage is very low, which will not help to make a one of the bulb of that. So it is disturbing to the children's education. This is the first part is there. And if I go to my student life in that time when I studied on that, the four brothers, and they sit together in a one in the sec of the art, and the middle one of the lamp has given my mother, and we are pulling out in there. No, you give the, I am not seeing, and he is pulling in that. This is a very big experience on that. Not only that, if you come to the India side of that, this is the lamp is needed the fuel, and fuel only you can get from the ration shop, and without ration shop you cannot get the fuel. And other part is there, when fuel has came using that is a chance of burn the house, because poor people house is very hard on that, not a building on this. So there is some case also happened in a year. So we are analyzing in these things, and then we decided on that the 5 million families where we are reached, why not we can be support them to come with a renewable energy or solar light of that, and they can be help to their children to educate on that way, good way, and then they will be not suffer anything on that. So on the basis of that, we are decided to proceed it on that.
So you assessed demand. You saw in your client group that there was a demand for this and there was a lack of a service that was being provided. And from the point of view of a microfinance institution, how did you assess the risk of this? So you met with your team and you ended up looking at the different possible risks that were involved in this. What were some of the risks that you identified as a team, and how did you decide that you would overcome some of those things?
Okay. Well, thank you. The entrepreneur should be a risk taker. Otherwise, they would be not treated as a successful entrepreneur. So we know that there is a risk is there. main risk is the reputation risk, because Bandhan, we are working the 12 years, but we have a good reputation in the ground, really, ground level, and also government level. So anything has been like to not satisfied of our customer, it will be hit to our reputation risk. So in that we are very much not agree to provide these services to our customer, but we also feel that it is also needed. If I not give them, so other one would like to keep them, and that time they will be maybe suffered. And if my intention is good, so why not I can be give that service in such a way, not for profit entity on that. In that way, where the service will be ensured by ourselves. So in that way, we have been also talked with the ARC Finance. ARC Finance has come to help us to start as a one pilot, is a one areas where we will be developed the system and model, and accordingly we will be like to also get the taste of that, how it is risk has come or not, and then we'll be like to scale around. So in that way we are like to.
And do you see, what kind of opportunities do you see in this sector for Bandhan in particular and for the microfinance sector as a whole in India? And what conditions do you think are necessary to help scale this program up? So you'll start a pilot under your NGO to protect your reputation, and then we all hope that you scale that and that 5 million people who are your customers end up benefiting. What do you think are the conditions to help scale that?
No, Bandhan is, the theme is believe of that, the small is beautiful, big is necessary. Because our country has a big 1.2 billion people. So small, there is no impact has come to our country level. So then we are decided on that. You come to the another way where how we are thinking about it. You know that the train line. So if once upon a time line have been set up, so train automatically can move to the anywhere of the country. That is not the issue. First issue is there, you will be set up the line of the train. So I hope that when we go to the pilot, that time we'll set up the line, set up the line on that, and then automatically it will be run on that. No, you know that now we have the 1,850 branch offices within a 12 years. How it has come? One branch have been standardized in such a way and make a one rubber stamp, just to stamp ink in there, put it and put it. So automatically it has been, because country is a big, people is a highly demand-oriented people, what have been already created, because microfinance have been given that the opportunities of the client's level to think about in a different way. They are not conservative on that. And that has also helped us to build up some of the entrepreneurs who can be, come forward to get the services of that. And that can be, will be like to minimize the risk of our side and scale of that. So without scale, we will not start to any program on that. We need to scale. I hope that we will be succeed in this scale.
Well, we're very excited to see Bandhan take this forward, and we're all looking forward to your success, and all of us, I think, are praying for your success. So thank you so much. Now let's turn to Dr. Cecilia from NWTF here in the Philippines, who began pioneering energy lending here in 2009. And Cecilia, can you just tell us a little bit about the evolution of your program? You started in one way, and then you made some shifts, and you learned some lessons, and you've come out in a little bit of a different place. So if you can tell that story, I think people would find that interesting.
All right, we began in 2009, and we started with the cook stoves initially, and then the lantern, which we got from Sun Transfer, yes. And we started very slow, And we also thought that since we had the loan officers, maybe we could just use the loan officers at the same time, be the ones to do the energy. But that was a mistake in a sense, and because the loan officers didn't want to do it, they were already doing so many things, and they were really overburdened by if they had to market. But we saw also that they could go on promoting it, and so with the help of our finance, we did some training, and we started it. We started it in other, not just we piloted it first, and then we rolled it out. But the thing that was happening was, even then, it was still slow. It was not working the way we wanted it to work. And then Raymond, who was in charge of this, thought of, why don't we do it the Avon way? You know, something like the Avon or the Tupperware or what, you know. And so that's how we evolved it, in a sense that we now have our own clients selling the product. So they have now, because they are entrepreneurs actually, so it's easier for them to sell it than our loan officers to do it. So the loan officers do the promoting, and the clients are the ones selling. We choose the clients, but we choose the clients that have been with us for quite some time. Those that have very good track record with their loans. And so they become the distributors of this. And because of that, we were able to scale up a little bit better than when we did it through the loan officer's way. And we also just did not stop with just one distributor. We worked with other partners. And I think now we have 3 or 4 partners in the field. And we choose them in a sense of who can give us a better price. That's very important. Also, who can give us a better support system. Because the lanterns don't just, I mean, they cannot fix themselves, you know, in a sense. So we do need a good support system. So those are the 2 things that we look for: a good price and a good support system. We don't want it to be very cheap either, because there might be, you know, it might only work for 3 months and that's it, you know. So just good products, but at the same time having a good support system. And by doing that, we also lessen actually the price, because we had spread out. By doing that, we also were able to bargain with the suppliers. And I think that was a good move on our part, in a sense. We actually encourage everyone to do it so that the price will still go down. So that's it.
That's fantastic. What you're doing is you're making clear to the product suppliers that that it's a competitive marketplace, and that they're not the only one, that there are a number that you're choosing from, that you're product neutral, and that you're looking for a set of characteristics that will be actually appealing to your customers at the end of the day. Can you tell everyone a little bit about some of the training that you offered to your Avon ladies, your solar Avon ladies?
Yes. Well, we had to tell them what the product was, you know, what it can do, and so it was a very simple. I remember Dr. Yunus always says, keep it simple, don't make it so complicated, you know. So we kept the training very simple, just to let them know what it can do, what are the advantages, how much savings they can do, because the kerosene was going up and down. Sometimes it was very expensive, sometimes it's okay. But for the most part, it's really expensive. And they spent more on the kerosene than they would with, so we showed that in the training. They saw that. And they are very, actually they're very good entrepreneurs in a sense that they were able to sell to neighbors and to friends and all that. So it's working well.
And also maybe tell the audience a little bit about the importance of having a service contract with a product company and the reason why that's important in terms of maintaining good relationships ultimately with your customers.
Yes, we needed really a good support system. In the last time we had the session, some people say that it should be, you should be able to fix things in 7 days, within 7 days. So we hope that we will be able to do that too. But we don't like to go into contract with a supplier that doesn't have a good support system, or who can at least train some of our staff who can do the support in the areas where we are having. The Philippines is a higher rate of electrification than in some other countries. But still, it is very expensive in other areas. So we're hoping that because of the problems that we're having in the electrification programs, which are becoming so expensive now, we will be able to sell more of these products.
Thank you so much. Cecilia, really, any of you who are interested in knowing about the importance of warranties and of service contracts, Cecilia can tell you all sorts of interesting stories. Cecilia and her team can tell you all sorts of interesting stories. So now maybe we can turn to Govind Singh, who is the managing director of Utkarsh, which is one of the fastest growing MFIs in India. Soon you'll give Mr. Ghosh a run for his money, I'm sure. And Govind also recently has made the decision to get involved in energy lending in the area where you operate, which is in the Varanasi area. So can you tell the audience why you decided to do that? And part of the reason why we ended up asking of all of the fantastic CEOs of companies that have become involved in energy lending, part of the reason why we chose to ask Govind to talk is that Govind comes from a background at ICICI Bank, and he's a super hardcore banker. So if anyone is going to look at this through the kind of lens of what's the business case here, it's going to be Govind. So tell us your rationale, Govind, for getting involved.
Thank you, Nikki. And Ghosh, no offense, please. I'm not going to compete with you ever. Just to mention, why this thing. So one, comes from your own personal experiences. The way childhood and the way Ghosh also mentioned about his own childhood. So I have also studied under that a small lamp, basically small kerosene lamp, and we understand the events, the misery or the toughness of studying in that environment. So that must have been almost 30-35 years back. But things have still not changed in most of the most of the parts of India. And as Nikki mentioned, I operate in Varanasi, which is the eastern Uttar Pradesh, one of the most populous part and most of underdeveloped geography in the country. Plus Bihar, which is as per official statistics, 17% people get electricity in Bihar. That is the official statistics. Actually, could be different in fact. And this is the electricity connection, and then comes the quality of power. In fact, at times the quality of power is so bad you can't even charge your mobile. In fact, it goes to that extent. So my personal experience, then when I'm seeing my own clients, I have gone through them. Then their kids are actually studying in those kerosene lamps only. And third is my own offices. In fact, so I am predominantly a rural player. So I'll have 80% plus branches in rural area only. Most of the time, my people are not even able to report for the day, make their reporting for the day. And when I ask them, most of the cases, they could not charge their mobile, in fact. And even in the headquarters, which is Varanasi, a large town with more than 2 million population, electricity cuts are minimum 8 hours, and it can go as high as 16 hours. I'm talking the city where my headquarters is. and in the hinterland, in the rural area, that must be the case West Bengal also. It ranges from 14 to 18 hours, in fact, when there are no power. So it is the non-power time I'm talking of. So even my branches, face a lot of problem in operating. Normally we operate without electricity, without even fan operating, and you are aware that the climate is extreme in terms of temperature. It goes as low as 3 degree or 4 degree, and it goes as high as 46 degree, 48 degree. I mean, that condition where we operate. So the idea was that our client needed and our staff, our office also needed. So so that is the first part. There is a demand. There is an ample demand. And the second case is, we have seen that there is an opportunity. There is a need, and the type of product what we are talking of is the product which is needed by my client base. So I'm not talking of a television set or those type of fancy items. I'm talking the hardcore basic necessity of life, and that makes a lot of sense for my client. So it is required by my client. There is a big opportunity. There is a need, and now I'm concerned about the business case also. I mean, it's a sustainable, viable model, in fact, which I intend to start very shortly. But I'm sure about the viability and sustainability of the model as well.
Yeah, you recently conducted some market research with your clients, and can you tell the audience what you ended up discovering, what they told you, and whether you found out that there was a willingness and an ability to pay for this kind of an energy product?
So to start the program, basically, we wanted to have a survey, and Nikki's team, our team, basically helped us in doing that survey and market research also. So we went to around 6 branches of the company and multiple villages, and we met a lot of people there in a focus group, basically, where we discussed with them for 1.5 hours, 2 hours, and in real detail that what type of requirements you have got, whether you need this or whether you don't need this. So initially there were some challenges that okay, we don't need this, and I mean the main things come from that we don't have 2,000 rupees to shell out for this instrument, because normally they spend around 100 rupees per month for their kerosene needs, and normally they don't have the type of savings so that they can have a capital expenditure put for the equipments. So you can say if you talk in a nutshell, they need this product badly, but they are not willing to give full money in advance, or don't want to buy it. So they are willing, if there is a loan available, if there is installment credit available, they will be very happy to do this. Second portion, they are very, very clear that it should be a rugged and very strong in terms of physically strong product, in fact, because the type of geography I just mentioned, in terms of heat, in terms of even the overall environment, it should not be a sort of fragile product. Then tomorrow you require some support, and we also know that this type of product will not get the type of support we need. I mean, it's not instantly available. So the quality of product should be good in terms of ruggedness, and if there is installment credit available, there is an ample demand, and I mean they will be looking forward for such a product. I mean that is the feedback when we had this market research done.
And what about your capital requirements? So we talked about the client's capital requirements. For you to start a program, what are the capital requirements for an MFI in starting this kind of energy program? And maybe talk a little bit about the role of grants versus debt versus equity, and the importance of each one of those for you in this process.
One thing I must clarify, as Nikki mentioned that I am coming from ICC background, and I was heading micro banking business with ICC Bank in fact before starting my own operations around 4 years back. So normally I don't believe in pilot. Pilot means that you are looking, normally what happens in pilot conditions, you look the conditions so closely, monitoring and supervision part is so close that nothing can go wrong, I mean technically speaking. So this pilot, basically I'm convinced about the business model, about the viability of the things. Why I'm doing it? One, I want to also test my other partner, the person who is supplying me, because to me he is not under my control right now. The type of product I get and what type of after sales service I'll get, I'm not sure about that. So I'm to test that part. And secondly, the type of operating procedure and processes we have been doing for last 4 years under microfinance program, and the type of process we envisage for solar energy program is totally different. Because this is asset back that is free, without any collateral. That is group lending. This is not group lending. And even the ticket size will be totally different, and in fact we have decided to have a totally separate team for this. So the people who are doing group lending for us, they are not going to source client for this. Of course, we'll use the network we have got. We have about 250,000 client base. The client base will be introduced by the loan officers, but they are not going to service those clients for their energy requirement. They are not going to convince them for the need and for the type of product they intend to sell or buy rather. From our side, so pilot is just to test the product and the other partners basically. That is how we look at it. As I mentioned, I'm sold about the viability of and sustainability of the model of the project what we are talking of. In terms of requirement of capital and other funding, so in initial phase, I don't think there should be a challenge. Even we have grown during the last 4 years, so we can also put limited money, whatever is required during the first 5-6 months time. But we have initially also we have got support from ARC, and then there are 2 other funders in fact who have already in principle approved that okay, if you are going for this pilot, we will be funding you. So that is for the initial funding. In the long run, the company will definitely require some capital also to take care of this product. But as I mentioned, because if you are able to establish sustainability and viability of a product, and you can show that there are standard operating procedures, for any type of business case, then it should not be a problem. So I'm very confident that getting equity or getting debt and for some you can say pilots or some innovation, getting even grant should not be a major issue. So funding, I'm not worried about for this product. Initially, I just want to see that whatever we have thought and the way we have thought about our partners, they also are of the same standard in terms of procedures and after the service, more importantly.
Yeah, we're very excited also to see you move your program forward. So thank you. Now we're coming to Willem Nolens, who runs SolarNow, which is a solar company based in Uganda, which is quite different than most other solar companies because it has an inbuilt pay plan, which is a method for clients to receive financing inside the organization. So, Willem, can you explain to the audience how your pay plan works? And the way in which it's similar to and different than microfinance, since most of our audience here are microfinance organizations. One thing I should mention is that Willem has very, very strong microfinance pedigree. He ran 2 pro-credit organizations in Africa, so he has microfinance in his blood, I should say. So.
Well, it's not that bad, Nikki. Actually, back in 2008, we looked at Uganda. Uganda is a beautiful country, very green, in the middle of Africa. It has around 33 million people, and 1 out of 10 people has access to electricity, and like my colleagues here said, access to electricity is really weak. So we did a study, why there's great solar products, why do those people not use it? So we sent a team out with motorbikes into the rural areas, and they visited around 600 systems in the field. We called it USOs, unidentified solar objects. And they found out that 70% of those systems was not working. Or at least not doing what it was supposed to do, what the client expected it to do. And the whole reason, for that market to not develop, we found, is a lack of quality. If people buy an expensive product and it fails already within the first or second year, well, they have spent, 3-4 months of income on it. Yeah, no miracle that no one buys it anymore. So we wanted to do solar. We believe in the product. We believe in the great impact of solar. But we also realized that when we do it, you need to do it with quality. But if you want to do quality, you also have to provide finance, because people cannot afford good quality. So we went to the MFIs, and it actually failed. It was maybe too early, I don't know. But the MFIs were very skeptical. They didn't trust the quality. They all had also seen, they had bad experiences. It was like consumer lending, where MFIs, of course, are used to productive lending. It was typically to farmers, rural people, very scary, with frequent or seasonal income patterns. So they didn't want it. And that's why we decided to do it in-house. It was actually, we saw the whole, and we still see the credit as a bit of a necessary evil. We have to do it. and we have therefore built it into our own company. We're selling solar home systems with great quality. It's a modular system, so that allows people to upgrade their system over time. And we offer it with a 12-month pay plan facility. That means people pay 25% up front, and then 75% they pay in 12 monthly installments. And we see that many clients then upgrade their systems. The systems cost, the starting product is around $350. That's a system that comes with 6 LED tube lights, a radio, a torch, and a mobile phone charging set. And then we have systems up to $3,000. In the mean, we're having televisions. We're starting now with fridges, which is very interesting. I mean, so we're not limiting ourselves only to the solar component. You know, you can hardly buy a very energy efficient fridge or a television on the market. I mean, what you can buy is very cheap on the market, but cheap means also often that it's, for example, a fridge is not well insulated. Sorry. You know, well, if you use solar, you better have a very energy efficient television. You know, an LED flat screen television with an inbuilt DVD player. That's what we're selling right now, for example. I mean, the sky is the limit. You can start. We're now already looking at tablet computers. So there's telephone reception everywhere. We're buying tablets. They are really cheap these days. We want to offer them with the SIM card. So in the middle of nowhere in rural Uganda, people can access the internet. Why not? They have a solar system. They have a SIM card. They have a tablet. It's all possible. So the sky's the limit. And I must say, asset finance, what we are doing for solar systems, actually is much less risky than the cash lending, the microfinance I used to do. You have a great collateral. I mean, if our clients do not pay, we go there and we tell them, you know, you haven't paid, we come and take your system. Oh, no. Let me go to the market, sell a goat. You know, they have the assets, they don't have the cash, but they do have the assets. And that's why I'm very hopeful that many of you will also start copy-pasting this very attractive model.
So tell everyone, since we're talking about the clients and the business model, tell us how you assess the credit worthiness of your clients. Do you give a system to anyone who comes to ask, or do you have a specific methodology for that?
Okay, so if you look at our minimum system, which is, like I said, $350, the free disposable household income per month should be $2, per day. Per day should be $2. So our staff in the field, we currently have 35 shops spread over Uganda, do a credit assessment, which is an individual assessment, so they visit the house. They do not only visit the house to do the credit assessment, but also to do the technical assessment. To look at the house, you know, what kind of system do you need? It's not like we're selling a product, we're selling a solution. We're providing a solution for the client. Does the client really need 3 lights or 6 lights, or, you know? That's what we look at. So it's a unique combination. We look at the house, of course, also in terms of payment capacity. If we don't see any assets, or, you know, if the client says, well, I'm growing Mayukh, which is the type of banana they used to eat in Uganda, and I have 2 acres of trees, we have a look, and we have to do that. But as I said, asset finance is less risky than cash lending, and so in the end, we can sometimes be a little bit less rigorous than many of the MFIs are. Having said that, we want to definitely avoid that we overfinance our clients. Because that gives the client trouble, and it also affects our reputation. If we have to do repossessions, which is like the last resort, it also destroys our reputation. Many people don't buy from us anymore, and it's not like, you know, in microfinance, many clients, or when we would open a new branch in countries where I worked before, we would have queues of clients. I mean, a solar system still, like Dr. Cecilia also said, you know, you have to sell it. You have to, you know, it's not like there's queues. You have to convince your clients. And that's also what attracts me very much to the asset finance model. You always have to balance your your selling skills with your credit obligations, you know. You have a smiling face because you have to convince the client to buy, and then you have a nasty face because the client hasn't paid, and you have to be also very strict.
Thank you, Willem. Now, you've achieved quite rapid growth over the last little while. To get to the next level, what type of financing will you need? And maybe tell the audience about the range of different kinds of financing that has sort of helped you get to the stage you're at right now.
All right, so we started, well, we have been, over the past 2.5 years that we exist as a company, we have had a constant cash constraint. And the constraint was so bad that we didn't have enough money to reach break even, which meant we were making losses, which again distracted some, you know, the investors were not happy, and well, so we were more or less in this circle. What tremendously helped us obviously was initially some grant funding we got to really establish the company in the first 6 months. Then we got loan funding from 2 big organizations, international organizations, and we had our first equity closing in the beginning of this year with Boston-based Investor Development. That equity investment also enabled us to source a local currency loan from a local bank with the help of a USAID guarantee, which was brokered also through ARC Finance, so Nikki, which is really tremendously helpful because our whole portfolio obviously is in Ugandan shillings, which is a very volatile currency. Inflation rate in Uganda is still 11%, so you can imagine, you know, our liabilities are all in dollars and euros. So right now we have a substantial loan, $1.6 million of a local bank, which is a huge breakthrough, and also triggers the interest of many international investors again, who see, well, you know, you convinced the local bank, so you know, we also believe in you.
Fantastic, thank you so much. And on that note, I'd like to move to Mr. Nazmul Haque, who is here representing IDCOL, which is the lender to the solar sector, among other sectors, in Bangladesh, and arguably is the reason why there has been such a huge growth in the sector in Bangladesh. So can you explain to the audience a little bit about IDCOL, the history of IDCOL, and how IDCOL got involved in the energy sector and the solar sector in particular, because that was not the initial purpose of IDCOL, but became a very important contribution.
Thank you, Nikki. My company, IDCOL, we are the premier infrastructure financing institution in the country. We have been formed primarily to finance large infrastructure projects in the private sector, which we still do. As I was telling Nikki yesterday, that we involved in the renewable energy back in 2003 accidentally and unwillingly. So because it was not our cup of tea, at that point in time, the last one that I made was $80 million loan to a single project. I didn't want to finance $600 loan to a company. So that was not our core expertise. Then again, we have been approached by a development bank, World Bank in particular in this case, to start a solar home system program. The target looked very optimistic at that point in time, 50,000 systems over a period of 5 years. So today I'm very happy to give you some statistics that 50,000 systems was achieved in 3.5 years, and as I stand here now, we have a target to finance 6 million solar home systems by 2016, and till last month we have completed 2.5 million installation in our country. So just to give you some more information about the size of the system, every month we cover 80 to 85,000 new families. Within this 1.5-hour session of ours, we will cover 700 more families in our country. So this is, I think, the largest off-grid electrification program in the whole world. In terms of our investment, we have already invested about $500 million in soft credit and grant, and we plan to invest $1 billion in this sector. The model is quite innovative. It is a sustainable model. We call it an ownership model. As someone mentioned already, we wanted to keep it simple. We didn't want the households who are located in the off-grid areas to go for technical solution to one party, to go for financial solution to other party, and get confused in the process. So we wanted to give a simple solution. We took responsibility for every aspect of the project, be it the technical quality control, be it the financing need, be it the after-sales service. So it was a one-to-one relationship between the supplier and the NGOs which we involved in the process, and between the NGO and to my company, IDCOL.
So you have about, is it 47 partners at the moment?
Yes.
47 entities that you're financing. Can you tell the audience how you select those organizations and describe a little bit the kind of organizations, because they're not all microfinance organizations, but some of them are microfinance organizations.
So yes, as of now we have about 47, we call them partner organizations, because all of them are not microfinance institutions, you're right. Increasingly we are trying to bring in more private sector operators, because private sector brings in dynamism with them. So the way we select, first of all, you know that as a country we are probably the origin of microfinance in the world. So there are thousands of microfinance institutions. And for this program to be successful, we want only the credible ones. Credible both in terms of their financial capacity, credible in terms of their willingness to make it a successful program. So usually the process is very competitive. The average statistics is 1 out of 100 applicants got selected to be one of our partners. So the process has it's very rigorous, and it's done. Interested in looking into, so please go to my website, it's there. So the primary criteria that we are looking into for the microfinance institutions, whether they have the capacity to run similar initiatives in some other programs. So we want some experienced one. We don't want brand new ones. In our country, we can afford that, because we do have a really lot of number of MFIs, and someone which has certain amount of financial capacity according to their audited financial statements.
Fantastic, thank you. Also, some people may know about the terms of the IDCOL loans, but some others may not. One of the things that that partners of yours that I know have said has been very useful is that the funding is softer. It's not entirely on a commercial basis. So can you talk about the rationale for that, and how you envision that moving forward in the future, whether you'll stay with this kind of soft loan scenario, or whether your intention is to move into a more commercial basis?
Okay, from day one, I have been involved personally with this program for the last 10 years. So back in 2003 when the program just started. So from day one, I recall that the one keyword was sustainability and commercialization. So the entire program, as we moved or got evolved over the years, was designed according to that keywords. So from the company, apart from various capacity development, training support to the MFIs for them to develop this sector, we provide the one-stop financing solution, as I already mentioned. So to break it down, the financing solutions that consist of grant and refinancing. When we started back in 2003, we provided roughly about 25% of the system cost as grant to the household. We thought at that point in time it was needed because it was a very new technology. Households were not trusting the technology, so it was important for them to have some incentive. Over the years, the grants gradually reduced, and as of now, there is no grant. We stopped from this year. Except for the very small systems which are sold to the ultra poor level, there is no grant in the system. So this is already moving towards commercialization in terms of grant perspective. In terms of credit, we also started with very softer terms at 6% interest rate. In our country, it's really, really low because the commercial rate is 15%. And with a 10-year loan. So over the years, we also tried to move towards more commercial terms. In this year, it has been made to 5 to 7 year tenor. The interest rate has been raised to 9%. It is still not truly commercial. It is somewhere semi-commercial. Down the line, over the next couple of years, we believe that the commercial sector will be able to participate along with our financing.
Thank you. Again, several of your partners said to me that they would not be where they are now if it weren't for the kind of financing in the terms that IDCOL has provided. And a number of the organizations that were part of our workshop yesterday were very interested to know whether the IDCOL model was transferable into other jurisdictions. And so I wondered if you could tell the audience a little bit about the advisory work you're doing with other countries to share this model and this philosophy that IDCOL has developed in Bangladesh.
So the beauty of the IDCOL program was that we provided a one-stop solution in terms of, as I mentioned, the technical standard. There is a separate technical standards committee which looks in the technology. So household, for every technology, we take responsibility for every technological problem. We provided single point financing solution. We provided all the capacity development. So we started the program from scratch. So in terms of our advisory capacity, unfortunately, we are a government company. So we, as I mentioned yesterday, that our operations cannot go beyond the boundary of the country. However, from this year, the company started an advisory wing to provide other developing countries with advisory support so that similar program can be replicated in their country. And now I'm very happy to share with you in this forum is that we have already provided advisory support to 8 African countries. And it's increasingly growing, so obviously down the line will play a much better role here.
Fantastic. Thanks to all of you. I wanted to open up the opportunity to members of the audience to ask questions. I don't know if anyone has questions to ask at this point, or whether you're all so exhausted. You have.
Hi, my question is to the lady who said that they are actually, making their members into entrepreneurs and who are selling these solar products. So, do the members, when they sell these products, do they give any credit or do they sell only on cash basis?
They also work on credit. Some of them do on credit. Some also just sell them on cash. It depends on them. And we don't make them entrepreneurs. They are already entrepreneurs. Yeah.
So when they give it on credit,
yes.
That credit risk they take, or the MFI supports them?
The MFI supports. Yeah.
Do we have other questions? Please come to the mic. If you have questions, please come to one of the mics on either side.
Mr. Ghosh and Mr. Singh. I come from a microfinance company called Ujjivan, and we actually attempted the solar lamp and even the water filter financing. But we found that we had 2 major issues, and I just want to know how you're going to tackle them. One is the after-sales service, and because of the poor after-sales service, the customers would not go directly to our suppliers, but would come to us. So those were the 2 major issues. Like, how do you teach your customers to go directly to the supplier? And what are you doing to ensure after-sales services are good from your suppliers?
Good. This is an issue, which issue we also thought about it, and you know that until the product will not go to the market, so we cannot know that what types of problem will come. This is true, but some problem will be assuming, and for that reason we have been discussed with them that say that within 1 year any problem has come, they will replace it. This is one. And other part is there. If you go to the Bedford car, it has been manufactured in UK, and this car has been sent to the India on the road. Not as a repairer who will repair it. After that, people suffer and then have been developed the repairer. So in that way, if you come to the mobile, mobile phone first come to the market, and then now you say that the repair shop is there. So automatically people also think about it, they have need, and another kind of people we can be develop the skill, and they will be also as an entrepreneur start to repairing of this type of lamp. That is another opportunities to create the employment in the country. So it is, we can be thinking that two ways. Within 1 year we can be develop some of the people skill who can be immediately repair it on that. And for that reason we cannot wait. If we wait, we can be go back again. Thank you.
Okay. So you're just hoping that time will teach these customers how to repair. Who's your supplier, can I ask? Who's supplying you the solar?
They have not launched their program yet.
Oh, okay.
So they're in a situation where they're thinking about the different kinds of options, but this issue is something that is that's important, that needs to be thought through. And of course, one of the things that that we've ended up talking about is the relationship with the supplier and the service contract with the supplier, making sure that the burden is shared equally, that it's a win-win, that there isn't so much risk on the MFI that it ends up creating the kind of problem that you've had. And I've spoken to your Mr. Ghosh also about exactly those problems that you're encountering. Yeah, Govind.
Just to add that, even during my interaction that I was mentioning that this pilot is not to understand the viability or sustainability of it, more to understand the type of partners we are getting, the type of products are available, and what type of after sale they are going to give me. So that's why we are launching in a few branches only. And just tell that yesterday we are having some internal discussion also. 3 years back I got solar system available, and I put that in my own office, my own cabin, and even today in my living room there is a solar system available. And I have used not only one but multiple, in fact at least 4 good companies I know for me, in India who are operating in solar. There may be more also, but I am at least exposed to 4. So the type of product what was available 3 years back and the type of product which is available today, there is a big significant jump in quality of product, and I think in after sale also. I'm not saying that now there is no problem at all, but that's why we intend to see, and a very strong SLA I think will be of help. I mean, we have also got experience in this, in yesterday's discussion and today's discussion. A very strong SLA which is definitely going to help. And third is, I'm not going to use my same loan officer who is doing that. They will just introduce to the center or to the members, but the whole process has to be done by what we name as energy officer, in fact. So he's a different guy, and that's why when Willem also mentioned that these people should be trained better than what our loan officers are, because loan officers are basically understand group is good, people know each other well, they are doing something for a long time, and then we normally provide the credit. But here things are going to be different. So of course we are also waiting for next 3 to 6 months time how the pilot for standard operating procedures, the experience about the product and experience about the after sale will happen. So that will definitely decide it.
I just want to add a point to this, because I've seen the other side of the story as selling solar lanterns myself. So the biggest apprehension of MFIs is that they're taking on a risk on which they don't have the control. Essentially they're taking on the product risk, which is completely up to the solar company. I'm just saying that why not think of a model where the risk of default is also shared by the product manufacturer. Ask for a first loss default guarantee on the portfolio. Let the product manufacturer take 10% of the first losses, and beyond that the MFI takes it. I mean, this is a model that we work in the education segment, and you will immediately know by the first reaction of which product company is confident of which products and providing adequate customer satisfaction. And the company which is not will never agree to that. The company which is will say, okay, a 10% first loss default guarantee. The first 10% of the losses go to the product company. Because end of the day, the MFI is taking on the credit while as the product company is booking a cash sale. So you're improving the cash flows of the product company straight away. A 10%, so I believe it's a question of how we exactly figure out the risk sharing, which will eventually take things to scale. I mean, I understand.
It was actually not a default issue over here. It was a
reputation.
Yeah, reputation and an inconvenience to our loan officers who had to face the issues in the beginning.
To that end, I think Govind answered that part of the question.
Exactly. And you know, I think this exact question that you're asking is the kind of question that every MFI should ask as it goes into this sector. You really need to think about how you're going to solve that problem. And you know, you have to test it out. I think, as Govind says, part of the reason why you call it a pilot is you're testing whether you can trust that partner. It's sort of like, it's like when you're dating someone. You date the person, maybe this is not acceptable in all cultures that are here, you date the person before you decide if you're going to marry him. You know, does he actually behave in a way where you think this is the kind of person you want to be with for the rest of your life from a product company point of view? So, you know, there are some criteria there that you want to see whether the company actually fulfills its part of the bargain, and whether this is an equal partnership or whether all of the burden is on you as the MFI. If that's the case, you're obviously not going to go any further with it. And there was a time when there were very few product companies out there. There are many more product companies out there, so as an MFI, you can pick and choose now. And it's not just based on the quality of the product, it's based on the relationship that you can anticipate with that company in addition to the quality of the product. So, do you also have a question, sir?
Yeah.
Yeah.
My question is basically the same question it was, so mostly it's answered, but still I want to have a specific thing. I'm Subhash, working in Timor-Leste. It's a small country with a 1.1 million population. So, but I am really getting passionate about the model Vietnam colleague is proposing it, where we are saying that a rural entrepreneur becoming your one way of a partner for promoting this product. But in Timor, where rural enterprise level is very, very low, and then after sales services is the question. Unless we have some kind of a reasonable, satisfactory solution to it, it will be difficult to, as MFI, like adding such risk and going ahead. That's some more inputs I'm looking for. How you are ensuring when you are making your rural clients as a partner, and how you are ensuring after sales service kind of thing.
I think for us it was really having clients who were with us for a long time and who have already proven themselves as real entrepreneurs. So that was one way of going.
No, repairing in terms of after sales service means in terms of solving the problems related to technical solution to the product if product is facing some problem.
Well, for the technical solutions, it was with the producers themselves.
So, like there was some linkage established between a rural entrepreneur and a producer?
Yes.
Okay. Thank you.
I would add on it a little bit, given our experience, since this is a day-to-day issue that we face after sales service, and given 2.5 million system in the field, that's a very big challenge on top of us. So we have taken 3 initiatives to ensure the customer gets very proper after-sales service. First of all, we have established a technical standards committee, and every supplier who is going to supply in our program will have to get their products tested and sealed by the technical standards committee, so that the market is not open to every supplier. Only the quality products get selected. So we get this first check that you see that after-sales service, more after-sales services is required for poor quality systems, not for good quality systems. The first check is there, so we create a bar, we set the bar quite high in terms of entry of the supplier, so that the first check is there. The second check is that you see that for your case, it's better because it's urbanized. It's mentioned very little or very few rural enterprises, so that the problem is for supply it's easier to be present in the urban area. But in our country, since most of the areas, the rural areas, it's very difficult for supplier to have a rural presence, and you can never ensure a 7-day service. But we can ensure in our program probably a service within less time than 7 days. It's because the service is not done by the suppliers themselves. Since we first have this procedure of enlistment, And as part of the investment process, supplier needs to agree on the standard warranty arrangements which we have set for the program, which is 20-year for the panel, which is standard, 5-year for the battery, not very that much standard, it's rather on the higher side. So we have ensured that from the customer side, if there is any technology problem, the customer does not have to roam around finding out the supplier who is not present in his village. The customer can directly approach to the NGO who is in his village. And NGO maintains the inventory and always some additional inventory so that the supply problem can be solved instantly. Then the NGO takes care of the problem back to back with the supplier. That is the scenario. And also we have created a call center and every customer, every 2.5 million customer has our call center number, which is managed by my company. So if customer is unsatisfied with after sales service, they can directly call to our call center. The problem, we said the lead time should be maximum 3 days in terms of problem solution.
Just as you were talking, another thought occurred to me, which is something that we've watched as ARC Finance with our partners, which is that all of the MFIs, for example, in India, the CEOs of those MFIs, they all know each other. So if one of them has a bad experience with a particular product company, he's definitely going to tell his friend when he sees him at a conference like this, and so the reputation is on both sides. There's the reputation of the MFI, and then there's the reputation of the energy company. The energy companies that end up serving their MFI partners effectively, that message will get around. It's like a village, all of these CEOs will talk to each other and they'll tell each other which companies they think are great companies and which companies they think could do with some improvement. So I think, part of it as the sector grows and as there's more competition, we will also see that kind of sharing that happens. Certainly we had some of those conversations yesterday already where people were sharing experiences about different product company experiences that they've had with different product companies. Sebastian, you have a question.
Thanks, Nikki. Just a quick one for Mr. Haque from IDCOL, because you're saying you're advising 8 African countries. Do you see it possible that they break your own country, the Bangladesh record? And if so, if you can disclose it, which of the African countries do you see closest to it? Not closest, but to have the potential, and what does it take?
Okay. First of all, this advisory initiative started just this year, so it hasn't matured enough to comment me on the state of African countries. But I certainly say Uganda is in a very good position. Same is probably for Ghana and Ethiopia. So, but then again, these are based on my initial assumption and discussion with the relevant agencies there, but obviously this needs to be further explored.
Thanks. Do you have a question?
Yes. Peter Fikowski from Results and Citizens Climate Lobby in the U.S. Mr. Ghosh, how likely, I have 2 questions. One is, how likely is it that India will grow as quickly as Bangladesh to get to 2.5 million or past?
He could handle that just himself.
The question then would be how quicker.
Growth is depend on that how people's need are fulfill the product. This is the one side, and how simplify the product and how quick you can provide the product. This is the things is the core factors. Other than this, if you see that the Bangladesh microfinance, actually whatever they have a very oldest microfinance history there, and whatever they have been default, we have been not done it because we have been learned from them and rectified our review of our product and design and system, so that on the basis of that we have been started. So always we will be faster on that. So no doubt. And the second is there, whoever the Govind is coming now, and he is faster than me because he also learned from our error or default on that. So always is there. So that is not a problem. Anything is unexpected.
So would you expect the 2.5 million in 1 year, 2 years, 3 years?
Solar?
Yeah.
within it.
Oh, you already have 2.5? Or, I'm looking...
No, what target you would like to give me? you tell me that I will be try on my best.
Yeah, okay. Okay. Second question, as a Silicon Valley...
No, you are not giving the target to me.
You have to give him a target. He's asking you to give him the target and he'll meet it. He's saying, give me the target.
I'll get back to you on that in a few months.
Thank you.
A Silicon Valley question: how much, for any of you, I assume the technology is changing, and how much does that affect you as lenders? Or is the technology stable enough that it's not a significant issue?
Well, I don't pretend I'm an engineer or so, but now the technology is proven. But before we talk about technology, I mean, I think from an MFI perspective, it is important to see what are the two key competencies that you as MFIs have. You have a distribution competency, you are distributors, and you have a lending competency, you're lenders. And in determining how you position yourself in this market, it's very important to look in the mirror and to say, you know, do I want to approach this market as a distributor or as a lender? Or I want just to be, you know, I want to delegate it, the distribution. If you choose to be looking at the market as a distributor, then I think you better look at smaller products. Lanterns, cook stoves, water filters, and what have you. Those products require little maintenance. Of course, you have to put some spare products in every branch. They are proven, to answer your question. I mean, the time that the teething problems are out of those products. So of course, you know, you see new lantern companies coming in the market almost every week. But there's good testing being done by GIZ, for example, and you know, Lighting Africa is very active in it. So that's one thing. If you see yourself more as lending in this sector, which is very attractive, you rather focus on bigger products. Because how can you give a loan for a solar lantern of $15? That's loss making. You cannot do that. You can just see yourself as a distributor. That's why I will not agree with, you know, loan loss sharing, etc. for lanterns. Because no MFI will do lending for lanterns. That's just a loss-making business. That's also the fundamental difference with Bangladesh and India. In Bangladesh, it's a solar home system market. You know, people have solar home systems. That's what people want. Electricity, radio, TV in particular. Where if I look right now what's happening in India, it's rather going to be initially a lantern market. But if you choose to be a lantern distributor, not a lender, but a distributor, your clients will come back after some time. They will say, you know, I love your lantern, but now I want more. Please do me. I want a TV. And that's when you, as an MFI, can do the lending, but can you still, or do you still want to do the installations, the after sales? No way. We've seen it, and it's a nightmare. It's complex. You need specialists to do it, to do the installations, to do the after sales. Loan officers cannot do that. Very simple. So that's what I wanted to add to you. And if it comes to solar home systems, I mean, this is a product that is, you know, 15 years old. The prices have tremendously reduced over the past few years. You know, it's proven, and it comes with warranties of 20 years, manufacturer's warranties. So, you know, the teething problems are out.
Thank you.
Okay, we'll have one more question, please.
With due respect, Mr. Ghosh, I am telling you that IDCOL is faster than any other companies in Bangladesh. And because I have to tell you very nicely and honestly that we, RDF, I am Ghulam Mustafa, I am from Resource Development Foundation, RDF, in Bangladesh. And we are amongst 47 NGOs in working with IDCOL. And this is my belief, honestly belief, as because we have been working so many bilateral projects in Bangladesh, but above all, IDCOL is the unique in decision-making process, in technical assessment, in selection process, in every other process, and it is going very faster, and we are very happy. We are pleased to do work with you, IDCOL. And I am telling you, and I am requesting you, all of the audience and the associates members are here, you please come to Bangladesh and learn, listen from us. Don't mind, please. And we can do something for the betterment of the poor people. Thank you.
Thank you. I already been committed on that way. And first thing is that we are very appreciate your growth. And some factor is our side also. We can be learned from you. And IDCOL is supporting to the 47 institution. No, that is one institution. Maybe how many growth has come. That is will be also like to assess it. And second point, in the advantage in the India side also, you know, that our 29% is in financial deficit. And this financial deficit is a three product. One is in export-import deficiency. Second is in oil. Third is in gold. Gold and export-import, these two are promoting our government. But oil purchase, they are not fulfilling by their money, because 25% of oil we have been produced from our side, 75% oil we are purchased from out of the country. So solar is a very good product. If we can be introduced in a door-to-door services, that the export of the fuel 75% will come down, and the deficit of the financial deficit will become down. That is a big issue for the government also that. So that we have need in to reach it that level, because without scale it is not possible. We are happy to learn from you. And you know that in the microfinance we are working every month is now current. No, every month we have the 100,000 clients new add. So we can be confidently say that we can be grow. Need to some of the support from all of your experience and your system, your support, and we can be establish our system on the basis of our regulatory part is there very strict surrounding of the other any country of that. So that will be like to happy on that we can be proceed in that way. And again I have been honored to all of you and your space. We will be like to learn and we will come to you. Thank you, sir.
So I would like to thank all of these.
Excuse me, can you take one?
Oh, okay. Is that okay? Can we take one more question? Yeah? Okay, one more.
For the Managing Director of NWTF, coming to a perspective of a microfinance institution, what measures you're taking into for your loan portfolio and the energy products will not suffer, because considering there's no perfect unit for the energy solutions that we're talking about here, and eventually the units will fail, will tear apart, and if that happens, the repayment capacity of the clients will be affected. In your case, what measures do you take into for this portfolio not to suffer?
I think for now we don't have that problem, but I'm sure that in the future there will be problems. So we are prepared for that event in a sense in our monitoring and in our support systems, and also we have taken into account that the units have lifespans. I mean, there's really no way that there is no lifespan. And so whether you buy a refrigerator or you buy anything, it has a lifespan. And the same things. So I think we will be able to meet that. And it has not occurred in a sense that because they were able to get a lantern, then they were not able to make a payment for it. That hasn't happened.
tell me who is your supplier, because I think that is one challenge that we follow in the sense of.
Well, you can ask Raymond. He's over there somewhere.
Maybe you should have an offline conversation.
Yeah.
Exactly.
Thank you very much.
Yeah. Okay.
So thank you all for sharing very honestly and openly your experiences, the challenges you faced, as well as your hopes for the future. We're all looking forward to all of you succeeding, and for IDCOL to teach, to give lessons freely, and for India to take those lessons and run with them. And also thanks to all of you for your very interesting questions, for staying with us, for being here so late into the evening. We really appreciate it, and we hope you enjoyed the session. Please join me in thanking the group here.